those pharmaceutical companies on Monday, and we had this massive rally that spread across the European and American markets. Things a little bit more muted in Asia today, although we are seeing things split kind of around the same sectors that we'd seen in trading on Monday. When we look across the main Asian markets today, we've got gains in Japan and in Hong Kong and on the Kospi in Seoul, but the Chinese markets, the Shanghai Composite trading slightly down a short time ago, and market analysts are pointing to the fact that perhaps as markets had been expecting that it could take up to 12 months for countries that rival China as exporters to catch up with how China has been able to get its manufacturing and industry back to business, that perhaps this could be a slight disadvantage to China if that timeline is advanced, if the vaccine comes through and is able to be distributed in time. Generally speaking, though, there has been this great excitement in certain sectors on the share markets, particularly travel companies. If we look at what's happening in airlines in Asia today, Japan Airlines up over 20% a short time ago. Cathay Pacific, based in Hong Kong, up by almost 13%. Korea Airlines up by over 11%. So plenty of optimism that this news on a vaccine could help to get travel back to business quickly as well. Energy companies getting a similar boost as well, perhaps an indication that there's an expectation among market traders that the demand for oil could return more quickly than had previously been expected. The flip side of that, though, is what's happening with technology shares, and we saw this particularly play out on Wall Street yesterday. While the S&P 500 and the Dow both finished up, the Nasdaq, which is where many of the world's main technology companies are listed, actually finished the day down. And if we take a look at some of the companies on the technology front, Netflix finishing down 8.5%, Amazon down 5%, and Tencent in China as well. Today in Hong Kong, it's down around 4% in trading too. And of course, the feeling there is that if we all are able to be vaccinated and get back to what things were like beforehand, that perhaps we won't have as much need for these companies, which of course have benefited massively during the pandemic and from, of course, increased people staying at home. There's a big question about how, if the markets are getting overexcited about this, of course, a lot of people saying they were just looking for a spark of enthusiasm to lift what has been a fairly glum couple of weeks. Of course, also markets rallying on Joe Biden's victory over the weekend.
Yes, Stephen, one of the big losers, in fact, in the market yesterday was the video calling app Zoom. It wasn't just to do with the vaccine, though, was it?
Yeah, Zoom's shares falling by 17% yesterday, of course linked to what the general sell-off we'd seen into the technology sector, but also other news connected to Zoom is that they had reached a settlement with the Federal Trade Commission in the United States, and this was over a complaint to do with privacy and security on its video calling platform. The FTC had been looking into an issue dating back to 2016. It claimed that Zoom had misled its users about the level of encryption on its video calls, and that in addition, those users that had asked Zoom to store a recording of their calls on their cloud servers hadn't been given the level of security that was necessary. So in this settlement with the company, the Federal Trade Commission said in a statement that Zoom's security practices didn't line up with its promises, and that this action would help to ensure that Zoom meetings and user data are protected. That's what the FTC is saying. The settlement will mean that Zoom will have to face extra scrutiny on the security front. They'll have to have a security audit essentially every year, and also a third-party assessment of their practices internally. They face fines of $40,000 for any violation of this order. Pretty small amount of money for a company that's doing so well, but nonetheless the enforcement is going to last for 20 years. So Zoom facing that extra scrutiny as a result of this order. The company, for its part, saying that it has resolved the issues that have been raised by the FTC complaint already. Now, Zoom shares tumbling, as we were just saying, but you shouldn't feel too sorry for the company because their shares are up by almost 500% compared to this time last year. Of course, there's a broader question as to what role video conferencing and apps like Zoom will play in our lives when things do get back to whatever normal looks like after the pandemic. But the shift to remote work perhaps might continue to see some significant demand for their services in the future as well.
I'm sure it will. Stephen, thank you very much. Stephen Carroll, our business editor here on France 24.